Hi guys, it's Elena, and today we're talking about the multiple savings accounts you need to reach your money goals. I'm pretty big on savings accounts. Now, I do believe you should also have investment accounts, but for me, I want to make sure you at least have some sort of foundation first. So I like for you to have some money in your savings. I don't know about you, but typically you have more than one savings goal. If you have all of your money in one savings account, things can get a little confusing. You really will have to keep track of this money is for this situation. This money is for maybe buying a house. This is the emergency money. And it just really gets too confusing. That's why I'm a fan of multiple bank accounts. So I actually have multiple bank accounts and I have multiple savings accounts. If you'd like for me to do a video on the different types of bank accounts I have, then let me know in the comments below. So to make your savings goals easier and clear, it's better to set up multiple bank accounts for these different savings goals. So we're going to talk about the 5 savings accounts that you should have. The first account that you should have is an emergency fund or an opportunity fund, FU fund. I've heard so many different terms for this account. I really don't care what you use. Pick whatever works for you. I just want you to have it, okay? Having an emergency fund gives you options and opportunity. For your emergency fund, the money for this account should not be at your regular bank. I'm not a fan of that because when you actually can see your savings account next to your checking account, you will actually be tempted to take money out. Some people are not, but most are. So I would prefer that you put it in a bank that is not easy to access. So the only way that you're going to go and access this money is if you actually need it. So these are typically online savings accounts or either a high yield savings account, like your Capital One 360s, Ally, Marcus by Goldman Sachs. Those are the type of accounts that you want to actually save this money in. It's not easy to access. It does take a little bit of time to transfer the money. And when I say a little bit of time, I mean 2 to 3 business days to move the money from your savings account into your checking account. Now, if you're just starting out with an emergency fund, I have the unpopular opinion. I'm really not a fan of $1,000 emergency fund. I'm typically a fan of saving enough to cover 1 month of expenses. Maybe it's because I live in a high cost of living area, but if your 1 month of expenses is less than $1,000, then perfect. But I want you to at least have a 1 month head start in your emergency fund. Once you get to that point, then typically they talk about having 3 to 6 months of an emergency fund. I'm personally more comfortable with a 12-month emergency fund, but hey, pick the amount that works for you. So have 3 to 12 months worth of expenses saved in this account. Another reason why I like for you to save your emergency fund in an online or a high yield savings account is because typically these bank accounts actually give you a higher interest rate. I think right now interest rates are around 2% in these type of accounts, which is higher than your brick and mortar bank. The second type of savings account that you should have is a slush fund. Now, this is the account that you can have attached to your regular checking account if you choose to, or you can even save it in like either your Digit or your Capital account. And what a slush fund is that it catches any mistakes that occur in the budget. Hey, no matter how long you're budgeting, something can always happen to throw it off. So you want to have a little bit of money to cover those expenses, but then also some unknown expenses that are just not high, and that they're not really emergencies. For example, maybe you already had all of your money allocated and you forgot that you needed to get your car inspected, or an oil change, or even maybe you forgot that you had committed to buy some cookies from your friend's Girl Scout, or even maybe your kid had an expense for school like a field trip or something like that and you completely forgot. Well, guess what? Dip into your slush fund. Typically for the slush fund, I like to keep that amount around $300 to $500. It's just easy to access. Even if you can't get to that amount first, then hey, keep 100 in there, keep 200 in there. Keep an amount that is comfortable for you so that when something comes up or something is thrown off in your budget, you can just dip into that account and get it, and not necessarily dip into your emergency or opportunity fund for something that is not an emergency or an opportunity. The third savings account that you should have is a gift fund. Gift funds just make it so much easier when birthdays and things like Christmas comes up. You don't want to have to use credit when either planning a birthday party or shopping for Christmas. We always hear that around Christmas time, people are spending somewhere between like $1,000 and $1,600 on credit for Christmas gifts. Well, if you know you typically spend around that amount, why don't you just save that all year? And then when Christmas time comes around or birthdays come around, you just pull that money out of your gift fund. Now for your gift fund, I definitely think it needs to be at like an online savings account. This is one thing that I really like about Capital One 360 because they give you different buckets to put your money in. So you can actually have and this is not sponsored by the way, this is just me talking about what I like. You can put your money in a bucket for a gift sinking fund, and every time you get paid you can put a little bit of money in there. Now the amount of money that you put in there depends on your own personal spending habits, how much you actually spend in gifts for birthdays and Christmas. But if you start saving, then you can always have that gift fund running. And we know that I'm a fan of automatic transfers, so you can set it up where on payday it automatically transfers to that gift fund, so that you are not having to manually move money into that account. The fourth savings account that you should have is a travel fund. Now, I've mentioned this in a previous video that for me, I just personally don't like to have to figure out and adjust my budget for travel. I have in the past, but the easiest way that I do it now is just by setting up a travel fund. It's very similar to the gift fund. You know where you want to go, or even if you don't know where you want to go, you just can set up an actual amount to go towards your travel fund each pay period. You're going to put aside $50 every time you get paid, or even once a month if that's what works for you. And then when an opportunity comes up for you to take a trip, then hey, maybe you already have most of that money set aside, or the whole trip is set. You're ready to go. You just need to pay your money and maybe get your outfits, book your travel and go, right? It's just easier to save for travel on a regular basis. So then you don't necessarily have to worry about how am I going to afford to do something when it comes up. And I don't know about you, but I was good for a last minute trip. So last minute trips are always covered because of travel funds. The fifth savings account that you should have, and truthfully one of the most important, is a retirement savings. Look, you do not want to work forever. I don't want you working forever. At a certain age, I mean, let's go with 65, right? That's the Social Security retirement age. You want to be chilling. Nobody wants to be getting up and going to work. So I need you to start contributing to your retirement if you are not already. The Department of Labor states that you need at least 70% of your pre-retirement income to live the same lifestyle once you actually retire. And if you are a low income earner, then you'll need even more. So if your employer offers a retirement plan, then you should start contributing. At the minimum, you need to be contributing the match. I know all employers do not match, but at the minimum, you should be contributing the match. And a match works like this. Typically, an employer would say, if you contribute 3%, then I'll contribute 3%. Some employers will contribute all the way up to 6%. If your employer does not offer a retirement plan, then you can look into possibly contributing to a traditional or a Roth IRA. Just make sure that you are eligible. So you should talk to a licensed consultant or financial advisor about whether you can contribute and how much you actually can contribute. So those are the 5 savings accounts that you need to reach your money goals. And remember, savings equals options and opportunities. You do not want to be in a position where you are working either a job that you don't like, or if you have an opportunity to do something that you dreamed about, you do not want to not be able to do it because you do not have the savings. So make sure you're starting to build on your different savings accounts for your different goals. And if you have questions about different savings accounts, then let me know in the comments below. Make sure you like the video and subscribe to my channel if you're not already. And I will see you next week.